Hi guys, welcome back to TipRanks. My name is Annika and we love to hear what different stocks you guys are looking at, different opinions you have on the market sentiment. Leave all your thoughts in the comments below. Today we're looking at a stock that I believe has a lot of upside potential. We're looking at NIO and its ticker is NIO. NIO is a Chinese multinational automobile manufacturer headquartered in Shanghai. They specialize in designing and developing electric vehicles. Now the news is that NIO and Royal Dutch Shell, which has a ticker RDS, are partnering up to offer battery swap stations in Europe and China. Battery as a service has been a key offering of NIO. This partnership has the potential to supercharge the company's expansion both at home and abroad. Both the companies are likely to be set to benefit from the deal. So as investors, we are likely to see share price increases both for NIO and for Royal Dutch Shell. The current price for NIO is $33.12. The analyst rating consensus deems it to be a strong buy, and the analyst price target on NIO is $60.67. This is an 83.17% upside. As for Royal Dutch Shell, the current price is 1,684.8 pence. The analyst rating consensus is also a strong buy, and the analyst price target is 2,159.91 pence, which is a 28.20% upside. NIO had already made its ambitious battery swapping plans quite clear on NIO Power Day. They said that we have increased our goal to build 700 new sites across China by the end of this year, up from an initial goal of 500. And over the next 3 years, NIO has committed to install 600 more new sites in China. By 2025, we have set a target to locate more than 4,000 battery swap stations worldwide, with 1,000 of them based outside of China. This agreement was planned last week. Both the sides plan to build and operate the first batch of battery swap stations in Europe starting in 2022. Shell will also allow NIO's electric vehicle users in Europe to access its local battery charging network. And in China, the two companies expect to install 100 battery stations by 2025. NIO has also opened its doors in Norway. The company has entered a partnership with the company that operates the most service stations in the world. And not only that, but NIO has partnered up with another oil giant, Sinopec, and this is to roll out over 5,000 battery charging and swapping stations. There are 3 main segments where NIO and Shell will be collaborating. The first is that they will be working together on battery technology and R&D. They will also be collaborating with co-branded battery swap stations in China, aiming to build around 100 by 2025. They also aim to begin building pilot stations in Europe in 2022. And lastly, the companies will be working together on the Shell Recharge Mobility Service Provider, and this aims to provide customers with an array of electric vehicle charging options and solutions through the Shell Recharge solutions. In short, they both are aiming to build a whole ecosystem of charging solutions, including charging stations, home charging, as well as corporate business charging. Looking at NIO's third quarter financial results, vehicle sales actually increased by 102.4%. The sales increased to around $1.3 billion. Total revenues also increased by 116.6% from the previous year-ago quarter, and this gave us a revenue of $1.52 billion. Gross profit also increased by 26.6% to around $309 million. Gross profit also increased by 240.3%, and this increased to $309 million for the third quarter of 2021. Based on all of this, the TipRanks Smart Score deems it to be a 10, A score of 10 tells us that it's the most likely to outperform the market, whereas a score of 1 is that it's most likely to underperform the market. A score of 5 is that it's neutral. And as you can see, the SMART score is a 10. Analyst ratings deem it to be a strong buy. However, TipRanks investors are very negative. Blogger opinions and news sentiment are bullish, and hedge fund activity has increased by 3.5 million shares last quarter. Technicals, however, have been negative. The momentum shows minus 24.86% is the 12-month change. Return on equity has also been negative at minus 61.39%. A lot of stocks in the stock market have recently crashed, particularly those in the technology sector. This could be a potential dip to buy in at. However, this is not financial advice. It is just that these partnerships with Royal Dutch Shell and NIO could be catalysts for share price increases in the future. Q3 2021 results for Royal Dutch Shell was positive. They actually announced an intention to distribute $7 billion to their shareholders in the sale of their Permian assets. They also reported the highest ever cash flow from operations excluding working capital of $17.5 billion and supported by outstanding cash generation across the businesses boosted by commodity derivatives. They also had absolute emission reductions target of 50% by 2020 compared to 2016 levels on a net basis. Although adjusted earnings was negative $1.7 billion, adjusted earnings benefited from higher prices, but this was offset by lower volumes, and in Q2 2021, there was a one-off release of a non-cash tax provision of approximately $600 million. They did have higher cash generation than in Q2 2021, despite 8% lower production due to seasonality and Hurricane Ida. The TipRanks SMART score for Royal Dutch Shell is a 9 in that it is also very likely to outperform the market. Analyst ratings deem it to be a strong buy. Blogger opinions are very bullish. However, news sentiment is very bearish. Technicals have been positive as we have seen, which has a 24.71% momentum on the 12-month change. So guys, what do you guys think of NIO and Royal Dutch Shell and their partnership, as well as Royal Dutch Shell's share price as well? Leave your thoughts in the comments below. We love to hear from you here at TipRanks. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when TipRanks releases a video. Remember, this is not financial advice. I'll see you guys in the next video. Bye!